The broadcast is now starting. All attendees are in listen-only mode.
So we're going to wait a couple of more minutes to all other attendees to join. Thank you.
Lady question box, lot of question is coming. People are asking, I can't hear.
Because we are not talking.
Yeah.
Yeah, this session is getting recorded. We are just waiting for another minute for other attendees to join. So we have approximately 500 enrollments. We are expecting at least 250 to 300 people to join. Okay, all right, folks. Very good evening and warm welcome to this webinar, Cryptocurrency as an Asset Class. So this initiative is brought to you by Bigboard Group. So Bigboard Group is basically a pool of talented investors, so who help each other, okay, in building the wealth. Okay, so today we have two prominent personalities, Prashant Kumar and Amiya. Okay, so before I introduce these two presenters, let me quickly introduce myself. Okay, so as a profession, I'm there in IT services business for the last 20 years. So in terms of equity investment, I started journey pretty late. I started, though I knew equity investment since 1999, 2000, but I started the journey in 2017. Okay, so this year I have aimed to this one achieve my first milestone. Okay, what is that first milestone? We'll discuss a little later. Maybe offline we'll discuss that milestone, how to quantify that first milestone. Okay, in terms of a portfolio, my portfolio, it's a concentrated and diversified portfolio. When I say diversified, it basically covers the following sectors: FMCG, insurance, chemical, and platform. Yes, the stocks, the combination of stocks does has compounders, multipliers, and of course mutual funds. I started with mutual funds. Okay, so I never stopped this SIPs, and today I treat these three mutual funds as my portfolio stocks. So we have first presenter, a flamboyant Amiya. Okay, so as a profession, he has 20 years of experience in technology. Okay, his focus sectors are technology and retail. Sorry, I just need to make a small correction. 20 years, I just copied from my experience. In fact, it is 15 years. So in terms of equity investment, he has a concentrated portfolio. When I say concentrated, we are talking about just 6 to 8 stocks. So imagine the kind of confidence he has built in his portfolio. And another portfolio he has is a short-term portfolio where it's basically, I don't know, maybe 8 to 10 multiplier stocks. Okay, so he was introduced to crypto back in 2012. Okay, so he did studied a bit on crypto, and in 2015 he started investing in cryptocurrency. Okay, so this decade belongs to Amiya. Okay, he has set himself a milestone to achieve 100 crores. Okay, I wish you all the very best, Amiya. Okay, so next presenter, Prashant Kumar. by profession, he's a sailor. You can see his photograph and costume there. Okay, so in terms of equity investment, he has good understanding of market since 25 years and tracking crypto since 2010. So what does it mean? So he has good knowledge of cryptocurrency for last 12 years. In terms of portfolio, he has a core portfolio and a short-term portfolio. Short-term portfolio, basically, these are multi-baggers. If not 100x, he ensures that he picks at least 10 baggers. In terms of sectors, so he covers FMCG, chemicals, API, and IT. So not many of us are aware of his few secrets. Okay, but I know those secrets. So I understand that, okay, he had an opportunity to interact, or he has seen aliens. Okay, so when he started understanding Bitcoins, that was the time when he started investing in Bitcoins. Okay, it was a time where he was holding 400 Bitcoins. Okay, but unfortunately, it was only for short duration. He sold that Bitcoins. Okay, so imagine if you would have this one, what is that, retained those 400 Bitcoins. So today, definitely, he would have been not presenting this webinar. He would have been holidaying in Honolulu or somewhere. Okay, so before I hand it over to Amia, I'll quickly talk about what are the different asset class exist. So especially if in India, if you see, we only talk about two asset class. Which are these two asset class? The first one is real estate, and second one is gold, silver. Okay, so definitely there are other asset class also. So these are the few asset class. I'm not going to get into the detail. In real estate, we have residential and commercial and gold and silver. But please understand, if you are into legit investment in first two asset class, okay, you need to understand the yield. The yield is just 6% in real estate, and in gold and silver, somewhere between 8 and 10% only, or maybe less than that. Okay, equity, it starts from this one 12%. Okay, if you are intelligent enough, if you pick the stock in right time, it might go up to 25%. Okay, debt, I'm sure you people are aware of this one, bonds and all. Again, when we talk about yield or CAGR, it is just this one 8% or below that. The startups, yes, we do require a lot of money to invest in startups. Okay, but that is another option which exists. Okay, so a lot of people hold cash in the form of fixed deposit or provident fund or VPF. That is also one of the asset class we do have when it comes to asset allocation. Okay, now the next two important asset class, okay, so which is a favorite of the modern investors, is cryptocurrency. Today we're going to spend more time on cryptocurrency. Okay, both our presenters will go into this talk about cryptocurrency, how we can trade this cryptocurrency, whether it is legal trading cryptocurrency in India. So all these things we're going to cover. And another important asset class, which is just this one coming up, is non-fungible tokens. I'm not sure if Amia or Prashant can cover this. It's my just request if they can talk about NFT for a few minutes. We'd be very grateful to you. Okay, so to know more about this asset class in detail, if you want to know, you can just go to my just one sec. Go to my Twitter handle. I have created a thread here. Okay, so you can just scroll down. You get to know more about each asset class, what you need to how you need to invest, and at the end of the thread, I also mentioned what kind of allocation you should assign. So this is just an example, but again, it depends on the age, your commitment, lot of other things. Maybe we need to have and dedicated session for asset allocation itself. Okay, so that's all from my side. Amia, over to you. Let me make you presenter, Amia. Yeah, Amia, you are presenter now.
Okay, thank you so much. Are you able to see my screen okay? Just wanted to confirm before I start so that there should not be any problem.
Yes, I can see. Yes, I can see your screen and your voice is loud and clear.
Okay, perfect. Thank you so much. So, well, first of all, thank you so much, Kiran, for that wonderful introduction. And I give everybody a warm welcome to this amazing session on cryptocurrency as an asset class. And I'm really psyched to be here speaking in front of you. Why I'm calling this session as an amazing session, or why am I psyched, is basically it is our attempt basically to provide all of you a perspective into cryptocurrencies. I understand that majority of you will be looking to have an answers to what cryptocurrency should I buy, where should I buy, what is the risk, and so on, right? But the biggest problem currently with the cryptocurrencies is the lack of awareness and lack of educators. So that is why I call this session an amazing session, because we would like to present you or give you a perspective so that you will learn it yourself as to how to look at cryptocurrencies. For example, if we look at equities, we have two basic common school of thoughts to look at equities. One is the fundamental analysis, another is the technical analysis, right? So whoever is following a fundamental analysis will tell you that you do not care about what is the price, but you look at valuations and will look at the business and look at the scale and so on, right? So that is a perspective through which you look at a business, and that is how you try to judge the business, right? And somebody who is a trader or a technical analyst, for that person, it does not matter what is the business scale and all these kind of things. It also does not matter what is the price or what is the valuation. For that person, all that matters is, will I get 10% in this stock and in how much time? That's all, right? So that is also a kind of a perspective. So the biggest problem with cryptocurrencies and the way cryptocurrencies are perceived by common man today has more to do on the speculation side, right? Because almost 90% of the people who are entering into cryptocurrencies, I wanted to say bigger percentage, but I stayed at 90%. They see it from a speculation perspective. Okay, the most important aspect to understand here is the cryptocurrencies or the underlying technology on which these cryptocurrencies are based on. Those technologies were never meant to speculate. Okay, those technologies were meant to solve a real world problem. The speculation came in when people actually saw an opportunity, saw a scarcity, and that's how basically the speculative side of things started creeping in. Okay, and what happens is, like it happens in equity, when you are new to equity, you don't understand where should I be looking at, how should I be looking at this stock and that stock, right? So the same thing is with the cryptocurrencies. Unless you have a perspective to look at cryptocurrencies from the technology perspective, you will most probably buy a coin, and in cryptocurrency language it is called as a shit coin. Please pardon my language, but these are the terminologies all these cryptocurrency folks use, right? So you will probably buy a junk coin or buy an alternative coin, which will most probably give you a heart attack because it's suddenly up 200% one day and down 100% the other day. You must have already seen that with with Dogecoin. So basically, this presentation is our attempt to disconnect the speculation from the entire cryptocurrency world and try and guide you to look at the technology, what is the scale, and what are the real life problem cryptocurrency as a technology is trying to solve. And if you develop this perspective, what happens is you will get to know yourself, which token should I be buying, right? So that's the attempt of this session, and that's what we are trying to achieve. We are not going to give you any speculative answers as to buy this token or buy that token. That is not the intent. The intent is basically to create awareness, try to educate you on the technology in as simplified form as I can. But you know at times it will get a little bit technical. So my advice, a sincere advice to you is, you note down a point where you found a particular point technologically challenging, and then you start studying that point independently. The recording of this session will be available, of course. So you go, you search for a particular topic, and then you come back and see the recording once again. And I'm pretty sure if you do such a thing, you will start making sense of the entire ecosystem pretty well. Okay, so that is what my attempt is. Now, before we proceed into all the content that we have, I want to give you a caveat here, that I am also a learner in this vast ocean of crypto. I have been dabbling with cryptocurrencies for quite a bit already, but I still can't say that I know more than a few percentage of the entire technology that is out there, right? So let me appreciate you all for joining here, because, as I said, for 90% of the people, when they think of crypto, that they think of a Bitcoin. When they think of a blockchain, they think of a Bitcoin. So for them, everything starts from a Bitcoin and ends at a Bitcoin, right? These people, they have no clue of the technology revolution that is in the offing. Now, you all who have joined this webinar are probably among the rest of the 10% people who at least know that there is a change underway, right? So I really want to appreciate all of you for spending the valuable time from your weekend, and we'll basically proceed on that note. So on a broad level, this is the structure of this webinar. We will basically go on discussing the basics of the crypto technology scale and outlook. Uh, this is where probably some of the technology related and a little bit complex things will come in, but I have tried to simplify as much as I can. Then we'll go on discussing what are the different trading platforms and what are the different tokens that are available out there, and why crypto is the next big thing after the internet. So this basically section is something that I am going to cover. Section 2 is primarily on the regulatory aspect, whether the crypto, what are the regulations around crypto adoption, which countries allows what, so on and so forth, allocation, what are the different laws, and what are the risks in crypto and how to mitigate those risks. So basically this section will be covered by Prashant. And in section 3 is basically primarily to try and answer as many questions as we can based on our tiny little understanding of this complicated technology, right? So we are basically okay, what this presentation is not about, it's very important to understand, and what you're not going to get out of this session is you're not going to get any buy sell recommendations, uh, any speculation and price predictions, because people will ask this question, and people ask this question many a times to me, that if I buy this coin, will it be a 10x? So sorry, this is not a right forum to answer any such questions. Any specific token discussions from the price perspective or from the speculation perspective, if you have any question on specifically on that token, we are happy to answer. Any other recommendation will also be not part of it. Okay, so I hope you are as excited as I am to start with this learning, and let's go in the details. Okay, so when we talk about cryptocurrencies, I have tried to broadly categorize the common questions into these 6 categories. Okay, first question, which is very common, is what currency should I buy? This is probably the most common questions one of the most common questions I have. Uh, there are so many different coins, and I really don't know which coin should I buy. Will it be 0, or will it be 10x or 100x or 1000x? I really don't know which coin should I buy. Where can I buy these coins? Because what happens is, because of the regulatory aspect, people living abroad have different ways of buying coins. People living in India, they have different ways of buying coin, right? So we'll try to answer these questions in various sections that we have outlined for you further in this session. Is it safe to buy, or has India banned it? So to answer it outrightly, India has not banned it at all. Okay, right now at least it is not banned. Then again, there is a question, what about hacking? Because I have seen in social media people who are opposing crypto, or people who do not understand crypto. First of all, they call it a bubble, and second of all, they start crying out loud that it is so very easy to hack a crypto. Okay, so we'll try to cover these aspects, how it is not really possible to hack a crypto during this course of the session. And finally, the question everybody should have is crypto really an asset class? Does crypto deserve a place to be called an asset class, right? But we have to look at the recent developments, where companies such as Square, who have put the 1% of their total assets in Bitcoins, there is a company called MicroStrategy who have put all of their cash they have in their books in crypto, right? There is a company called Mass Mutual. They have also been currently consistently buying crypto from the open market. Canada recently approved three ETFs based on Ethereum. Rothschild Trust have also started buying. So basically, all these old economy and centralized institutions, they have started seeing that probably there is a probable use case for these cryptocurrencies, and we really do not want to miss out on a trend by just being ignorant about them and just calling them a bubble. Okay, so before we get into detailed discussion on technology, as I said, does crypto even deserve a place to be called as an asset class? And a genuine answer to that is crypto has not yet reached a level where we can call it an asset class, right? But it has all the potential to be one in the next 10 years. So crypto's role in various domains, be it finance or be it money markets, everywhere it's growing, right? But I understand the fact that there are many hurdles in crypto that are yet to be cleared. So it's not that when we say it is immutable, yes, it is immutable, but there are many technological hurdles also in way which needs to be cleared for crypto to become a mainstream. And when we say crypto, from now on, for this session at least, it will be the technology that we'll be referring. Okay, so for crypto to become a mainstream, there are still many more hurdles that are yet to be cleared, right? But if I simply give you an example, before we had online banking, what the traditional banking was very different, right? So you used to go to bank whenever you want to withdraw money or deposit money. You used to go and always get your passbook updated, right? That used to be the traditional banking back then. Online banking came in, and if I were to tell my dad that in 10 years or 15 years, you do not have to go in bank anymore, everything I can do from this tiny little piece of equipment which we call a computer, he would have laughed out loud, right? But now it is so integral part of our lives that we cannot imagine going to the bank. We really don't want to go to the bank, and if we go to the bank, we'll get lost because we don't know what to do, with whom to speak, right? uh, so the traditional banking definition itself has changed from previous generation to our generation, and let me tell you that it is again set to change from our generation to the next generation. And I'm not referring only to the banking as a function, but I'm referring broadly to the entire finance. The centralized finance is set to become a decentralized finance, and so on and so forth. So basically, crypto has a potential to be a traditional finance in next 10 years, right? So uh, one more thing, I am a very die-hard fan of Naval. I am sure those of you who are on Twitter must be following him. If you don't follow him, I request you to go and follow him. He is a legend. So throughout this session, you will find some of his beautiful quotes on cryptocurrencies. So please be prepared for that. So, Naval says that operating an economy without cryptocurrencies will eventually be like operating one without a financial markets. Yep. So before we get into, so now we'll get into the technology, and there is a nice video that I have to show to you. So it will basically set the tone for the further topics that we have.
Amia, audio is pretty poor. Can you increase volume, Amia?
Okay. Well, audio is full. I don't know from where I have to increase it. But maybe there are subtitles and maybe it's getting recorded. So I'll just continue.
Please.
single person. The idea is you don't have a central record of transactions. Instead, you distribute many, many copies of this ledger around the world. Each owner of each copy records every transaction. So, to buy something using cryptocurrency, I give the shop my details. The shop asks all the bookkeepers if I'm good for the money. The bookkeepers all check their records, see if I have enough. If I do, they tell the shop, and then all update their records to show the movement of money. So there's no way that a forged transaction can make it in. If I try to alter a ledger, it won't match all of the other copies. It gets rejected. Oh, and one of them, at random, will be given a reward of some newly created cryptocurrency. This is how cryptocurrencies work. And remember, all of these bookkeepers, all of these ledgers, they're not actually people. They're computers. Lots of people.
Okay, I hope you enjoyed that video. It's really very simple video, and that's basically the crux of what blockchain is doing, and basically that's what a decentralized ledger looks like, right? So you must have been hearing this term called as decentralized very often in social media or on Twitter or on some YouTube video or in some WhatsApp discussions and so on and so forth, right? So that's what basically the decentralized means. So when we are talking about a centralized system, the records or the ledgers are only with the one primarily central entity. So all other entities, all other businesses, they have to come and communicate with that entity, correct? And if at all this entity is, is prone to fraud, which it is, what happens is basically the outcome is not same for everybody who is communicating with that entity. And the biggest problem with such systems, such centralized systems, is we have a single point of failure. So if, for let's say for an example, there is a home registry office, and if it is closed for everybody, right? There is just no possibility that you can register your property if the office is closed, correct? And there is also possibility, because it is human nature to err, it basically it is prone to fraudulent practices, right? And that is why the centralized systems are set to become decentralized. I'm not saying that, this does not mean that suddenly tomorrow you will have a completely decentralized banking system or completely decentralized government. No, that may probably never happen, because all these big countries, US, Russia, India, nobody would like to lose control on the entire centralized system that they have built over centuries, right? But what will definitely happen is decentralized systems will come in some or the other way under the governance of these other entities. Okay, so our attempt is to try and find out where this decentralization is coming in and where there is a big trend that is emerging. Right now that you understand from this video that what basically a distributed ledger looks like and what is basically mean by consensus, we'll go and see that in a little more detail, right? So the common term that you always keep on hearing is the blockchain. Yeah. And probably the question here comes is, what exactly is blockchain? What exactly is this block? I don't know what it is, right? So what happens basically, let's say for example, uh, there are people living abroad India, and they want to remit money to their relatives and parents and friends who are back in India. They want to remit certain money. So somebody from US will be sending in dollars, somebody from Europe will be sending in euros, somebody from Australia will be sending Australian dollars, and so on and so forth, right? So what happens basically is all these are nothing but a payment transactions, right? So what happens is, if you put all these payment, if you look at payment transaction, what happens is, when you make a payment from, let's say you might be using any service like TransferWise, or you must be using some agent to make money transfers, what happens there is basically, uh, the entry from money transfer agent goes to the bank, from bank it goes to the clearance, then it basically comes to the agent who is there in the receiving country, and from that receiving country it again comes to the bank of the receiving person, and finally the person receives the money. So there are so many different players involved, and everybody has to maintain a ledger on their side, right? So what basically happens here is, it brings in a huge inefficiency, it causes delays. There are certain services that now are happening in real time, but there are also countries like Germany, where you, for example, you transfer your money from your account to someone else's account. There are two ways: either you have to pay an additional cost to transfer money in real time, or it takes about 2 days or 3 days to get money finally transferred into someone else's account. Now what happens is, if you want to use a blockchain, what you will use is, you will collect all the transactions that are happening every day throughout globally, and you'll put all these transactions in, let's say, in a collective box. And what happens is, all these are payment transactions, and you call it a block. Okay, and you say that at the end of the day, I will stop calling it a block number 1. So when a new day starts, I will take in block number 2, and then block number 3, and then block number 4, and so on, right? So basically what happens is, today I have one block, tomorrow I will have another block, the day after I will have one more, and finally I have chain of block of payment transfer data, creating a blockchain. Okay, so blockchain is nothing but the entire chain formed of various blocks that carry certain type of data. Okay, now we'll go and see what exactly that certain type of data is. So if you look at one single block in a blockchain, okay, so it usually have three, not usually, it always have three types of different attributes, or three types of different things that it carries in itself. First, it is a transactional, it's the data. Okay, so it could be a transactional data, or it could be a payments data, or consumption data, or any other kind of a data, right? For example, if you take Bitcoin, which is primarily seen as a store of a value, and it was primarily created to track the payments, right? So Bitcoin blockchain, and the name of that blockchain is Lightning. So the Lightning network will always have a data of type payments, right? Similarly, you can create various different types of blockchains, and you say that in one of the blockchains I will have a retail transaction data, in one of the blockchains I will have, let's say, institutional transactional data, right? So every block in the blockchain has this type of a data, and what that data looks like. Okay, who was the sender, who was the receiver, what is the nature of transaction, what was the money, what was the value, what was the time. So this kind of data this block records, and that's what we call the data, right? Then there is something called as hash of the block. Okay, and that's basically the unique identifier of that entire block. See it as a fingerprint of a block. Like every person has a unique fingerprint, right? So no second person has the same fingerprint, right? So we can always determine who the person is, we can always determine the identity of a person from the fingerprint. And if you have seen some criminal series on Netflix, you will see that there were cases where people used to remove the fingerprints from people they used to murder, right? So what happens then? You cannot identify anybody, right? So that is the function of hash. Now what hash is, I have described further down in detail in the next set of slides. And in addition to data and hash, any block also has the hash of the previous block. Okay, so any block, it carries at any given point in time, it carries a data. What was the transaction, what was the value, from whom it was actually initiated, it ended with whom, what was the transaction time, date, and so on. That's the data. And basically then you generate a unique fingerprint to identify that data, and you call it a hash. Okay, and these hash are nothing but a cryptographic functions. Okay, so I'll not get into more technological terms, but those of you who understand cryptography, you know that there are cryptography algorithms which basically convert a very commonly looking message into a very garbled series of numeric alphanumeric series, which is not easy to understand, right? So basically that's what hash is. And at any given point in time, because this block needs to know what was the previous block before me, so it also saves the hash of the previous block. Okay, so that is basically the link between two blocks. The link between two blocks is this hash of the previous block that connects with the series of other blocks, forming a chain, and that's what we call a blockchain. Okay, now couple of slides may get technical, so please bear with me. So when I say hash, okay, let's say for example your data on a blockchain looked like hello world. That was the word you wanted to transmit, and that's what your data looks like. So when you put this hello world through a hash function or a cryptographic algorithm, you get an output which looks like this key here, right? And then you make another transaction, another data, and you add an additional capital 0 at the end of it. And for you, it may looks like it's still a hello word, but it is not, right? So it generates a whole together different hash for the data. So what happens is a single block can have, let's say, hundreds of transactions clubbed together, and those hundreds of transactions will have individual hashes belonging to that each transaction, right? So the transaction 1 hash, transaction 2 hash, and that entire transaction hash is put together, okay, in the single block. Now what happens here is uh, every blockchain basically sets something called as a difficulty target, and that is initially Satoshi Nakamoto, who was the creator of Bitcoin. He hard coded the starting difficulty target. Difficulty target is nothing but basically a something value, a sum value. It's a hexadecimal value. So there are possible ways where you can convert this value into more understandable, human understandable form. Okay, so that's what it was hard coded initially, and it was programmed to be readjusted every 216 day, sorry, 2016 day. Now what happens here is whenever there are series of transactions clubbed together in a block, okay, you get the entire hash of a block. Now the question that people ask me, that when we say that people or the blockchain miners, right, people who mine, they do some kind of mathematical calculation, they try to solve some equation. What that equation is, right, that is one of the very common questions people have. So to answer that is, all these miners use their computational power, the computer, right, the computational power, to determine a collective hash value which is less than this difficulty target value. Okay, that's what, in a most simplified form, I could explain that that's what it tries to do. That is what the mathematical calculation or determination this entire blockchain is trying to do. Okay, I will not get into more technicalities of it because those of you who are not from the technology background may find it really boring. So we'll proceed further. Okay, now what happens is, let's say I have an entire blockchain, I have these 3 blocks in my blockchain. Okay, like I said earlier, every block in the chain has a hash and a previous hash. The hash means what that data contains, what basically that block contains, and the hash of the previous block, right? So if it is a first block in the blockchain, that will never have a previous block, and that's what we call the genesis block. That's when anybody starts the blockchain. Okay, that's when the what we say the day one of the blockchain. So there is no block. So whenever a first block is created, it is called a genesis block, and it never has any hash. Okay, it has its own hash. Now let's imagine we have a blockchain and I try to change something on the second block. What happens? Like I explained, if I change something, it changes the hash. Okay, so what happened is if a hacker comes here and he or she tries to tamper with this block, okay, it is allowed, tampering is allowed, but what happens then is it changes the hash, and now hash is changed. The second block says, uh-oh, okay, there is a problem. My hash I can recognize, but the previous hash I cannot recognize anymore because it's no longer 1234. It is now ABCD. What has happened? Something has happened. So what it makes the second block is it makes the entire blockchain, it basically invalidates that. So that means all the blocks in the existing blockchains become invalid. Okay, now there is a possibility that you can still validate the blockchain if you have good enough computing power. If you have a supercomputer at your perusal, you can always try and make this blockchain valid. Okay, so like I said earlier, there are certain fallacies in the technology, but these fallacies are now getting overcome by the additional patch upgrades which are currently happening in the system. Okay, so if we go forward from here now, in the video we understood what consensus exactly looks like. Okay, and basically it's nothing but a peer-to-peer network. uh, well I don't know about those who are you know before those who are born in 80s or 90s. We have always used BitTorrent to download movies or to download games, right? So that was nothing but peer-to-peer network. So we had this site bittorrent.com, probably I don't even remember the name now, or Pirate Bay, I think. Yes, the Pirate Bay was also one of the sites I remember. So you used to go on that website and you used to search that, okay, I want to download this movie. And when you wanted to download a movie, what you used to look at? How many seeds are there and how many leeches are there? Seeds is nothing but how many people are currently seeding that movie, which is completely decentralized. It's not stored on anybody's computer, it is stored on everybody's computer, and everybody is seeding it, right? So the torrent that we used to use so commonly back in those days was probably the first decentralized or distributed application that anybody could have used. It's just that we never saw it from that perspective, that BitTorrent was probably the first decentralized application that everybody has experienced with. So if you go in that torrent, what you used to see, you used to control the download speed as well as upload speed. And I'll tell you what I used to do. I used to set my download speed at maximum, and I used to set upload speed at 0. Yeah, that we all used to do that, right? So basically that uTorrent was the first peer-to-peer network that at least I interacted with. Okay, so peer-to-peer network basically means everybody knows everything, right? So what happens in case of blockchain is when a single blockchain is existing, everybody else has a copy of that blockchain on their side. So all these people you see here, they are not people, but they are computers. So when we say there are nodes, these nodes are nothing but the computers. So basically all these people, they have a copy of the single main ledger or single main blockchain on their side, on their computer. Okay, until now I'm assuming it's going pretty smooth. So everybody has a copy. That means if something changes on the main blockchain, it is suddenly, replicated and told to everybody who is connected as a node to that blockchain, right? So now imagine a situation where a new block is coming on a blockchain. Okay, a new block is coming on a blockchain, then what happens basically is everybody gets that new block on their blockchains. So if you see, this person here has this block, this person here also has this block. So likewise, everybody who is part of the network gets this block. Okay, and what do they try to do? Again, they try to solve the mathematical function that I just explained you. And then basically whoever solves it first, the main chain then incentivizes that person for solving that block and validating that block. And then it awards a token in return for doing this work and maintaining this blockchain. And that token is nothing but a Bitcoin or an Ethereum or whatever coin you want to call it. So these tokens were created so that these blockchains can be maintained continuously without having any downtime, without having any glitches, without having any single point of failure. For example, what happens if this person suddenly switches off a computer? Then one node goes off the network, but there are 3 nodes still part of the network. So they all have to agree that the new block which has come in is indeed a valid one. So if everybody says, oh yes, it is a valid one, and until they do not approve, what happens in the main chain here is, you see, this block is currently in a waiting status to be added to the main chain. It is not added, right? So when everybody agrees that, okay, now we say that this block is valid, now that block becomes a valid part of the main chain. And this process continues every second, every minute, every hour. Okay, that's what basically we call a consensus, right? Now it is also important to understand what scale this technology is bringing to us, right? Before we understand the scale, it is very essential to understand uh, that any cryptography blockchain has two of the three properties. I'll get into that once we get into that follow-up slides. So like I said, the blockchain trilemma. What is the blockchain trilemma? So what this technology says, at any given point in time, any blockchain can have two of the three properties. Either it will be decentralized and secure, or it will be scalable and decentralized, right? So the Bitcoin blockchain said, oh, I don't want to be scalable. I want to be decentralized and secure. Okay. So that's why the blockchain is completely decentralized and it is secure, but it is not scalable. That means the number of transactions that happen on a blockchain of Bitcoin are less than 5 transactions per second. Okay, which is a farce. But the point we all miss here is, this chain was never meant to be scalable. It was never created to execute hundreds and thousands of transactions. So when we say that Visa is able to process 5,000 transactions per second and Bitcoin cannot process even 5 transactions per second, you're not comparing apple to apple. You're comparing two different use cases. Visa is created to execute as many transactions as possible per second, but blockchain, but Bitcoin was never created for that. It was created as a store of value which is completely secure and immutable. It was never meant to be scalable. Okay, then there came another technology called as then came another technology in 2015, and a person called as Vitalik Buterin, he launched that technology, and we know it by the name Ethereum. Okay, what Ethereum said is, it is okay if we are not secure. Okay, hold your thoughts when I say that. It is okay if I'm not secure, but I want to be decentralized and I want to be scalable. What it means is, I want people to come and see my code, copy that code, or build applications on top of my code and launch an entirely new application on top of my code itself. So I want my platform to be absolutely infinitely scalable. Now what started happening here is, when we say it is not secure, it does not mean that your data is at risk. When I say it is not secure, it means anybody can come, see your code, copy it, launch a completely new network. Okay, I will cover this aspect in further slides. So basically that's what I mean. Okay, now as the number of people who started using Ethereum as a platform to launch their own decentralized apps, or dApps as we call them, uh, the number of transactions on Ethereum to execute something, okay, or validate a block, that started getting congested, and people had to pay more money to get their blocks validated, or people as in these developers, right? That is why Ethereum never scaled up in terms of price. I'm talking now. So it never scaled up to the level of Bitcoin, because Bitcoin, as I said, it is never meant to be scalable. It was always secure and a store of value, but Ethereum was not that. And because of this congestion and high processing fees, people started saying, it is really bad network. But when you hear these words these days in social media, like Berlin update, London hard fork, these are nothing but updates that are coming to the Ethereum blockchain, which are solving these problems. Okay. Then there are some blockchains altogether, different new blockchains altogether, who said, who says there are only two properties a blockchain can have? No, I want to launch something which has all three of them. And then that's how we have another project. Okay. So likewise, what happens basically is more and more project starts, creating from something that Bitcoin started. So that's why what we see is Bitcoin and Ethereum, we call them stable coins. Not basically, that means is they are large cap coins, and they are pretty stable in terms of the performance, in terms of the application execution perspective. uh, Now, as I was speaking of the scale, there are only 5 transactions that happen on a Bitcoin chain currently. Okay. And to be honest with you, I'm not a Bitcoin investor. So I have no idea if there are any new updates coming to the underlying technology. We all know that credit cards can settle up to 5,000, or in some cases even 15-20,000 transactions per second, right? There is another chain which is basically a Bitcoin's test net. That's what we call BTC STN. That is promising of executing 9,000 transactions per second. And Ethereum, post this and this 1559, pardon me, apologizing for the technical terminology here, but see it too as a patch upgrade. So your Windows always upgraded with more better features, right? So the Ethereum, post this patch upgrade, which is set to happen in July this year, it will start processing at least 100,000 transactions per second, and that is next to none. No other crypto technology currently has the scale. Okay. And that basically brings us to the trading platforms and tokens. Okay. I'm pretty sure the most of you must have had a sigh of relief now that we are out of these complicated technological jargons, and I pardon for that. But we'll now get into the trading platforms and tokens. Okay. So one thing that you have to understand is, when the technology boom happened in 90s and in early 2000, almost 90% of the companies who made most of the money for the investors don't exist now. Okay. They went out of the business, and same thing will probably happen to the entire crypto world. Probably 90% or even 95% of the tokens or the coins may become technologically redundant, irrelevant, and they will simply get closed. Their volume will dry up, people will simply come and sell out. And probably what will happen, and what happens in equities, right? हिंदी में बोलते हैं माल चिपका के गया. So something of that sort will definitely happen in cryptocurrencies. So that's why for you, as an investor or as somebody who is interested to invest in cryptocurrency in order to make some money, it is very important for you to understand the technological aspects that I just described you. Okay. So all these technological aspects, they basically solve a real world problem. Okay. So there are lots and lots of coins out there, and probably more than 70% of these may even be scams. We don't know. There are, and at the time of presenting this session, as per the coin market cap update, There are more than 5,000 different tokens available in the market right now that anybody can buy and sell or trade into. But what exactly these tokens are and why there are so many tokens in the first place? It's very common question, right? So when we say that Indian rupee, there is only one Indian rupee. When we say US dollar, there is only one US dollar. But when we say crypto, why the hell there are so many different coins? I'll come to that part now. Now imagine there is a chef, and there is a well-known chef who has a very popular dish in a particular town. Okay, and it is loved by everybody, and his hotel is always full, always full. What happens in that case is this chef says, he's a very kind-hearted chef. So he says, see, I do not want to have any secret ingredient. I want to make everything public. So he makes his recipe public. Every single ingredient he makes it public. Now there is another chef who thinks, I want to start a business, but I don't have an idea. What should I do? Now this chef has made his recipe public, and everybody simply loves it. So what this person starts doing is, the second chef starts collecting feedback from people who have eaten this dish, and they start asking, do you really like tomatoes in there? Do you want, would you prefer if I replace tomato with that, and something like that. Okay, I'm taking a very, very common example so that you can understand these terminologies a little better. Now based on people's feedback, what he does is that there are certain people who think tomatoes don't go well with this dish, or lettuce doesn't go well with this dish, let me replace tomatoes with radish. And he creates his own hotel, and he launched a completely new dish, and he gives this dish a completely different name, and he says this dish is better than the previous dish. And suddenly he has a booming business, because people who did not prefer certain things in the previous dish, they think, oh, this dish is better, let me start using it, let me start eating this one, right? The same concept percolates down to the blockchain. What happens is, uh, anybody, because as I said, Ethereum's code is open source, and that's what we call as open source. If the chef makes his recipe public, he has basically done nothing but he has made his recipe open source, right? So when everybody knows what is the source code of a particular program or a particular product, what person does is copies that code, and tries to see, there are these problems in this platform, let me solve this problem. I'll use the entire code as it is, but I'll simply fix some of the problem areas. I'll fix those problem areas, and I'll load completely new platform. And the platform uses, again, as I explained, it incentivizes miners for maintaining that platform, and I'll call that token as a completely new token. And voila, I have another token in the market. And basically this has a kind of a snowball effect. People who saw problem in Ethereum launched competing networks by fixing only problems that were there in the Ethereum, or bringing in some additional features, and they brought entirely new platform. And voila, you have another coin, and let's call this a Cardano. You have another platform, and let's call it Polkadot. So essentially, these three platforms are competing with one another, but they are built, at least the other two platforms, they have their source in Ethereum. The seed was Ethereum, right? So that is basically how you get multiple coins from one basic single coin. Okay, so comparing this with the fiat currency that we use in our day-to-day lives is not really a correct use case. And let me also tell you here very outrightly that cryptocurrencies are not trying to replace fiat currencies. That is not the intent of cryptocurrency. The intent of cryptocurrency is very different. Like I said earlier, you need to have a perspective, and that perspective is, most of the people first of all look at them as currencies, and then they look at the technology. Whereas it should be, you look at the technology, what is the real-time problem is it solving? Is it making my money transfer real time? Is it making my money transfer instant, without any payment, without any transaction cost, without any, let's say, third party getting involved? I transfer on Saturday, I want the other person to receive on Saturday. What happens when there is a bank holiday in India on Saturday? So these problems if those problems are fixed by any technology, then certainly the adoption of that technology will be very widespread, because more and more people want their transactions to be settled in real time. They don't care whether it's a holiday, it's a public holiday, it's a national holiday, or it's weekend. I want my transaction to be settled as soon as I create it. As simple as that. And if there is a platform that offers such a thing, then I'll go and adopt it. So the adoption basically go on exponential curve. If the adoption is huge, if the scale is huge, and if the nature of the problem that technology is solving is very genuine, then certainly the token coming out of that platform will have a very good future. Correct? So such should be your perspective of looking at crypto. You should not even call them cryptocurrencies. You should look at what problem they are solving, and how can you do that. It's very simple. You either go to Coinbase or you go to Binance, and you'll search for a coin, any coin, and then there is an info option for that coin. Go to the info option and try to read what problem that coin is trying to solve. Like I said earlier, Bitcoin was the first blockchain network that we all had, right? But Bitcoin said, I want security and decentralization, I don't want scalability. Then there came Ethereum, which said, I want scalability and I want decentralization. It is okay if I am not secure enough as in terms of looking at my code, okay, and copying it and launching something else. And Ethereum said, not just that, I want to enable people to launch new applications and new services on top of my code. It's just like what we have in our mobile apps. So for example, I'm an Android, and I say I want people to develop Android apps on top of my own code and launch a completely new app altogether. And those apps could be paid apps and people can make money on top of that. I'm okay with it. But it is built on top of me, right? So basically, that's what Ethereum's primary motive is. They want decentralization to become part of mainstream economy, right? And then there, as I said, there were problems with Ethereum, and that's why another two more networks were launched, and that's what we call this Cardano, and this is a Polkadot. So they are nothing but competing network with one another, and they have solved the problems that there are in the Ethereum. Now imagine you are, let's say, a central body such as RBI, for example. Okay, and as an RBI, you control all the banks. All you have basically control and governance over all the banks, right? And you say tomorrow that, okay, I will allow all the banks to use the blockchain technology. I'm not talking about cryptocurrencies. I'm talking about technology. I say, okay, I will allow banks to use blockchain technology. HDFC comes and says, okay, I will use Ethereum. And it announces, okay, I will use Ethereum. Then there is another bank, Kotak. And Kotak Bank comes and says, no, I will use Polkadot. There are improvements in Polkadot compared to Ethereum, and it suits our requirement. Then there is, let's say, another bank, SBI, and SBI says, no, I will use Cardano. RBI says, no problem, go ahead and use it. But what happens is, then RBI says, hey, but I want all of your data to be interconnected. How will you ensure that? So that's when a new kind of platform was launched, and that's what we called as Cosmos. Cosmos has a token called as Atom. And what it enables is, it enables various blockchains to communicate with one another. So that HDFC can communicate with Kotak, Kotak can communicate with SBI, and all these three can communicate with RBI. Now then there is another bank altogether, let's say IDFC Bank, and they say, hey, I'm not on blockchain at all. What should I do? I want to come on blockchain, but my entire ledger is currently, in my legacy system, which is out of the entire blockchain economy. How can I bring my data? Then there is something called as Chainlink and says, hey, I will help you. Okay, I will be your bridge between the legacy transaction system that you have, your own servers, and I will help you to bring that data in the blockchain ecosystem. Whatever underlying blockchain you choose, I will be your oracle. I will bridge that gap for you. And voila, you have a platform called Chainlink, and the token which is coming out of that Chainlink is called as Link. So if you basically, start seeing this as an entire ecosystem, these different coins will start making sense to you. Then there is this another coin which you see with a dollar symbol. People always complain of having tremendous volatility in cryptocurrencies. So somebody needs to do something about it, right? So there was another coin launched as a called as USDC, which is basically USD coin, and it's a stable coin. What a stable coin is? A stable coin is nothing but a coin which tries to maintain its value close to $1 as possible. So always one USDC will most probably will be always equal to $1. And then they will use underlying blockchain and algorithms and various kind of computational power to maintain that ratio 1:1. Okay, so the institutions who wants to avoid volatility, they can always come and use these stable coins, right? All of us trade primarily on centralized exchanges, and it's a reality. For example, I use Binance and Coinbase, which is controlled by a handful of people. So it's a centralized entity. It's not a decentralized entity at all, right? So you use WazirX or you use ZepPay. These are all centralized entities, even though they are allowing to trade decentralized cryptocurrencies, but these entities are essentially centralized entities. So if we are trading decentralized currencies, we should have an exchange which is also decentralized and which is not controlled by anybody, right? For example, can you imagine suddenly tomorrow NSE, BSE does not exist or do not exist, and there is no body who is sitting and controlling. There is no single body who is controlling, but there is a network that controls it, like it was earlier, right? So then there is something called as decentralized exchanges, which we call as DEX, and that DEX is nothing but built on Ethereum, and that's what we call a Uniswap, this one. So Uniswap is nothing but a decentralized trading exchange, where basically what happens is, and you must have experienced this very commonly, uh, if somebody is using a Coinbase, the Ethereum value for you for now in dollars, let's say it's $2,400 for one Ethereum. If somebody is on WazirX, one Ethereum will cost 2450. If somebody is on Binance, one Ethereum will cost 2435. So how we ensure that you as an investor in the cryptocurrencies get the best rate possible out there in all these exchanges? That's the real problem, right? I want best rate out of every possible rate that is out there. Like for example, in e-commerce, we have different rate on Flipkart, different rate on Amazon, different rate on Snapdeal. And then there are products and services, basically they come and compare what are the different rates, and they tell you, okay, this is the best rate. Policybazaar.com, they do the same thing. They discover the best rate for you, they discover the best product for you, right? That's what Uniswap does. It has a potential to make these centralized exchanges obsolete eventually down the line, and it helps you discover the best rate available for one Ethereum, so that you can buy at a best price, right? Then there are certain additional tokens called as Filecoin, which is basically nothing but decentralized storing system where nobody knows what you're storing. It's same as BitTorrent. This coin here is very interesting coin. When we call it as a basic attention token. And what basic attention token does is, all these Google advertisement platform, right? AdSense, you must have heard, used, or you must have used AdSense in your own websites and made some money, right? So what it happens is, basically for a normal person who is using, let's say, moneycontrol.com, you get to see bunch of different advertisements. Who makes money out of it? Either Money Control makes money because they are viewing the ads, and if you click on something and buy a certain product, then the company who is advertising that product, that company makes money. What you make out of it? Nothing. But because you are browsing something and you are searching the best phone under 10,000 rupees, your data is stored in cookies and used by all these advertisement companies to advertise correct product onto you, right? So basic attention token, basically what it does is it incentivizes a person who is also viewing an ad. So if you join basic attention token network, you get your own browser, of course. And if there are any advertisements that are currently happening, you join as a node and you can use internet through their own browser as you are using through Google or Internet Explorer or Mozilla or anything like that. But because it is getting your, because the ads are getting your attention, you get incentivized. On your TV, when you're watching IPL, you see ads and you feel so frustrated. Okay, imagine a situation when ads are running on a website and you get incentivized from the revenue that is generated. How wonderful would that be? I don't know whether it will replace the mainstream centralized entities or not, but the point I'm trying to drive here is the change is underway. Okay, and all I'm suggesting is you give an attention, an unbiased attention to it. Stop calling it a bubble. Try to understand the technology and then start looking at these things a little differently. So when we say there are different kind of tokens, there are primarily three types of tokens. One is the utility token, which basically gives right to the holder of that token to use services offered by the platform, for example Uniswap. Then there are security tokens, which basically that derive their value from the external and tradable assets. And there are governance tokens, which basically the on-chain governance allows basically people to collaborate, debate and vote on how to manage a particular system. So what I was saying, when we say that India has not banned cryptocurrencies, what India really can do here is, and I could be wrong in my assessment, so please, cut me some slack here. India can probably, launch a stable coin, and let's call it an INRC, which is pegged with 1 rupee. One INRC is equal to 1 rupee always. And what then you do is you categorize all these different tokens which are there into these broad categories. If it is a utility token, give it to somebody to govern it. If it's a security token, give it to SEBI to govern it. If it's a governance token, give it to the government bodies such as PMO to govern it. And you make people to pair all the cryptocurrencies with INRC, like we have in Forex. If you are an Indian resident, you cannot trade in USD EUR pair. You have to trade always with USD INR, EUR INR, right? So you make everybody trade in INRC pair Bitcoin with INRC, pair Ethereum with INRC. You get to govern, you get to control, and you get to allow the technology to come in your markets. That's what government should do. But again, I'm not a subject matter expert and I could be wrong in my assessment, like I said. So these are primarily the type of tokens, and why we think it is bigger than internet. It is very important for us to understand why it is bigger than internet. So that this is a brief history of the entire technology revolution that has happened. In 1990s we had the first official public availability of internet, and then series of events started happening, and today basically we have a widespread acceptance and by institutions and developer community for majority of the stable cryptocurrencies. So if you see, at least the Ethereum, Chainlink, and Bitcoin, these are at least the three primary tokens or cryptocurrencies which are adopted by institutions. There was news the other day that European Central Bank has adopted Chainlink as the standard to transfer the off-chain data, on-chain data, basically. So any bank who comes under ECB's purview have to use Chainlink's platform in order to bring their off-chain data or legacy data on the blockchain. And there are also some countries like Canada who have approved ETFs which are based on Ethereum. Chainlink is also added as one of the top 3 coins by one of the very big institutional entity in US. So at least the mainstream adoption is happening for these 3 coins. It may happen eventually with other coins as well, But when you say, okay, what are some of the safe coins that we are looking at based on the mainstream adoption, then these are the three ones. Sorry if it is getting too long, but I have to, get through this very quickly. So when you look at the problem cryptocurrencies is solving is, we had this scenario of Web 1, Web 2, and Web 3. So Web 1 was the primary start of the internet where you used to read only. Okay, you used to go on Yahoo or MSN.com and you used to read something. Then with the Web 2, you got to read and write. So you started creating contents on videos and on YouTube and Facebook, and we had Apple and WhatsApp came in. So we are currently in Web 2. What Web 3 applications are nothing but they are self-executing. Okay, so what happened, they are self-executing through something called as smart contracts, and smart contracts are nothing but a series of codes, series of rules translated into code. If this situation happened, do this happened, do this, something like that, broadly, not exactly but broadly. So whenever somebody makes a payment, the settlement and everything, recording, settling, clearing, everything happens automatically. Only the person who is sending the payment does it manually, but everything else happens automatically, and that happens through something called as smart contracts. And these smart contracts are nothing but outcome of Ethereum, or you can say Polkadot or Cardano, because they are competing with one another, right? So that's the trend where we are actually going right now, from somebody sending money to somebody manually stepping in all the time to somebody sending money and nobody stepping in all the time. That's the transition Web 3.0 is currently doing. Okay, uh, I will quickly go through some of the very, very good tokens from the entire ecosystem's perspective. So because it is essential to understand the entire ecosystem. So comp or compound is basically a decentralized interest rate protocol. Just like we have these securities lending and borrowing SLB concept in our markets, right? If you hold 100 shares of LNT and you want to lend it, you can lend it through SLB. If you want to borrow it, let's say it's not in FNO, what happened in GMM Fodler, for example, you can borrow the shares and you can short sell those shares. So same concept is there in compound. If you own certain Ethereum, for example, okay, you can always lend your Ethereum and earn interest on top of that. Okay, so that's what we call the decentralized finance. For example, if you have $1 and you keep that $1 in US bank, you probably get nothing or probably 0.5%. But if you have one USD coin which is pegged to 1:1 $, and then you lend it through compound or through decentralized platform, a decentralized finance application, you start earning suddenly 5% or 6% on $1. That's the change this technology is bringing in. Of course it is not mainstream, so people may say that I will not believe it with large quantities, but that's okay. The intention of this session is to make you aware that this change is happening. Okay, Uniswap, I already explained you what Uniswap is. Chainlink also we saw, it's an Ethereum based platform. Cosmos we also discussed. Aave is also another token that basically handles the money market transactions, which are completely decentralized. This is a stable coin, again, to mitigate the volatility. But BAT we discussed. This is very, very, very unique token called Numeraire. So it's basically used by US based hedge funds, and this is very close to what our mentor and guide Ashwin sir has does. Like he also reads for the messages what people are posting about what messages, right? So he kind of crowdsources these insights into his algorithm, right? So this US based hedge fund has done a similar thing. So basically crowdsource AI to make investment decisions in the US stock markets on a certain blockchain technology, and that's what the token is all about. And the only thing that I want to give you while I part ways with you is, imagine a world where you can make payment without a middleman, or investments without a broker, or you can give loans, take loans without a bank. You can have an insurance without an underwriter. or record keeping without an accountant, escrow without an agent, completely global, secure, nearly instant and free. Why would you not adopt such a technology? You will, right? So with this, I conclude my presentation, and I am sorry if that was too lengthy or too complicated to understand, because the onus on me was to cover the technology side of this blockchain and the cryptocurrencies. Probably that's why it could have been a little hard on you. So I will now hand over to Prashant, who will take you through the regulatory aspects, the risk aspect, and how to mitigate the risks that are currently with cryptocurrencies. Off to you, Prashant bhai.
Hey, Amia, thanks a lot for such a wonderful presentation. In fact, very informative presentation. Okay, so I just have a request because this one, what is that? We have time scarcity. While Prashant does the rest of the webinar, I just request you to open the questions, this one box. Okay, so click on the question, reply your answer, and just this one, what is that? Go for send to all options so that we all read your answers.
Okay.
Okay.
I'll go
over to you, Prashant.
Thank you.
Yeah,
please.
I'm online.
Yes, you're audible,
Yeah,
and we can see as well. Thank you.
Yeah, good evening, everyone. It was a very nice and thorough presentation on all the technological aspect related to crypto. Hope it must be useful to you. So now basically the parts which I am going to cover quickly is related to the practical aspect regarding which a lot of people have questions that what happens if we can buy, how we can buy, and a lot of things which I have put is basically my practical experience of last 10 years. So like what problem I had and what I did and what problem with authorities I faced. So this is that I am just put a summary so that you people don't suffer. So basically the Naval Ravikant famous quote, it says hard to stop people from buying cryptocurrencies, ban purchase and computer will mine them out of thin air. So basically they say it's an unstoppable force. You cannot ban it. You cannot like hack it. You can hack an exchange, but you cannot hack the basic, you can say crypto generated or whatever asset is there. So it's a very powerful statement. Now, the main issues regarding the adaptation, why people are not adapting, like countries or corporations or government, why they are not adopting if this is so revolutionary, this why they are not doing. So first is conflict of interest and tussle between new age technocrat and government. So what is happening nowadays, our policy like in India also or anywhere is made by people who are sitting in elected people sitting in parliament, and they are advised by bureaucrats which have gone through normal, you can say, education system, maybe an IAS in India or he is a graduate or maybe engineer. So they are never exposed to this type of new revolutionary system. So they don't know what it can do, how it can do, and how it can be used. So there is a lot of confusion in that. So now presently we are hearing a lot of talk going on new crypto regulation in India. Problem is when initial draft was made in 2018, which talked about ban, it was made by people sitting in office who had hardly read about cryptocurrencies, how it can be used, and they just used to read that, okay, somebody is asking ransom in Bitcoin and all illegal activities done by Bitcoin. So basis all this news headline they made, their you can say regulation was based on all this, not fact, but all the news and hype around that. So this is one main thing, they don't know how to use it. So a lot of confusion is there. Now there are few smart people who are advising them, but their voice get drowned in all this noise. So that is an issue. Second is how to treat the crypto. So like we say crypto is like money, Bitcoin is a coin, but there's a lot of fight how to treat it. Like in US, there are different exchange treat it in a different way. So like suppose you are trading through Coinbase in US. So Coinbase there comes under what you call foreign exchange regulation, and they have to report to FECN for all the transaction made there. So suppose you open an account there, you have to provide your detail. Like in India, we provide PAN card. There may be some, I don't remember exactly, there's some detail you have to give. So the main reason is they come to know who is trading, how he is trading. So for black marketing purpose or some illegal activities. So FICN regulate that aspect. Then secondly, there is what we call SEC. SEC says how to control that. So they don't directly control as a security. They control the wallet holder. So Coinbase creates wallet for you. So they tax on the wallet. So directly they are not controlling your token. Then there is a commodity exchange. They treat it as a exchange purpose. You can trade on exchange, and they treat it as a commodity. So US being such a advanced, you can say, regulationary country, there also there's a confusion about how to treat it. Some countries are treating it as a hybrid, Scandinavian countries. So these confusions are there because all the department of bureaucracy fight for their power. They want to control it. So this type of problems are going on. So India also, it has been not decided that it will be treated as a currency or as a commodity. So let's see how new draft bill comes out. Same what I said, clarity is not there on taxes and regulation. Like we say, when electron was discovered, some experimenters showed that it is a particle, some showed that it is a wave. So same is happening with Bitcoin. Everybody is not able to comprehend because some places it can be used to just store a file. Some places it can be used for transaction. Some places you can use it for a commodity exchange. So like a lot of confusion. So let's see how everything comes out. So few countries which have streamlined, like category 1, a country like UK, USA, Switzerland, and all this, they have a regulated crypto market. They have come up with a regulation. You know what you can do, what you cannot do. So there is a written regulation, and trading is going on. You pay taxes, so everything is there. Second are the country which I proposed, and the strange part is Pakistan is also come up with a proposal how they want to regulate. So in this aspect, India, I think, has to start thinking quite fast now. USA, they are introduced some more changes. That's why I put in category 3. And there are category 3 countries like Algeria, Ecuador, Qatar, etc. They have outrightly banned it, and it's a criminal offense to like trade or do any kind of transaction using crypto. So at present, what we know, this is the third category. India government is planning to put all the crypto activity. So let's see. So this is the major issue which has created a lot of uncertainty around the cryptos. It's not only in India, all over the world. So to the next slide. Like allocation. Now this question I get asked from a lot of people that how to allocate, what percentage I should give. So one thing I would just like to make straightforward clear that still this is a very evolving technology. There's, as Amya said before, there is chances that what is very hot today, hyped today, within a month it can go to zero. That technology can become redundant. Maybe some new application is launched which solves not only the problem with the old one, but introduces some drastic, or you can say measure, which completely alters the landscape. So we have to assume that. So I will normally, I suggest, it's a thumb rule, it's up to person how large your portfolios. Don't allocate more than 5%. 5% is also a lot for a lot of people, but don't allocate more than 5%. And maximum, if you want to go, maybe go to 10%. But in that case, you have to make sure that you allocate into mid cap, large cap, and small cap coins. Like I've just given one example here. Like suppose you have 1 lakh rupees and you want to allocate. So allocate around 32% into Bitcoin, 32% into Ethereum, and then XRP. So basically XPR, I think this is spelling mistake. So it's these are the three major, they are used by a lot of big establishment, and they are here to stay. They will not go. So at least 60-70% of that 5% you are making sure it is in safe states. Now other you can allocate one like mid cap one. So here you have ADA, Link, Gcash. So these one are mid cap. Like to talk about mid cap stocks. So these coins I will consider as a token as a mid cap one, and rest 5% into small cap, like they are hit or miss type. So it's IOTA and AVI. So don't buy all this. I am just giving for example, like AVI, IOTA, they are very small cap. Now AVI has become large cap, not large cap, basically 4-5 billion market cap. But this is how you should distribute. Reason is in 2014 and 2017 crash I have seen. So few coins that time, maybe it's trading for 1 cent or something. They rose to almost $500-600 within a week. So if percentage wise you calculate, I don't know, it's 100 lakh time or how many time, not few, lot of coin just jumped. And when they crashed within a day, they almost came back to same price. So just be careful with allocation.
Yeah, Prashant,
Nowadays,
Prashant, Kiran here. We have a question, Prashant. Okay, see, one Bitcoin cost $60,000, so which is approximately 42 lakhs. Okay, so does the platform allows fraction buying?
Yes. Now the best part about these cryptos are you can buy in fraction. You can buy in, like in India, 100 rupees also you can invest in a lot of other coin. Yeah, Bitcoin, if you invest, they are smaller fractions called Santoshi, and you can go maybe 10 times, like 0.0010 times that portion you can buy. There is no limit to fraction because they already saw the future. They knew Bitcoin price can go to million also, so it's allowed. Same like Ethereum. Problem is with the exchanges. So what the exchanges do, they put a limit that suppose I buy a Chainlink, so I can buy minimum I have to buy 0.5, or I buy suppose ADA, I have to buy minimum 0.3, something like that. They will put. Lot of exchanges are different, but yeah, you can buy fraction, so there's no issue with that. So just allocation is very important. Everybody, I will request not to go overboard. Nowadays I'm getting a lot of call regarding Dogecoin. So I try to explain to everyone what is happening. You must have seen GameStop in stock market, which happened a month back in the US market. So same thing, something like that is happening. One more thing I will like to discuss. Okay, I will discuss forward. So this is the allocation part, and accordingly you can follow it. Now, so risk mitigation. So I will first I will like to say risk is something known and unknown. So what I am discussing is a known risk which have been already happened or which can happen, but there are still a lot of unknowns in crypto. So it keeps coming in, so you have to keep yourself updated. So first one very important is decentralized status. Like in India, if you deposit money in a bank and bank goes bust, government is there to make sure that you get some minimum amount of money. Or when you trade in equity through NSE, BSE exchange, and there is some issue, then SEBI is there to make sure that you get your shares which are there in demat account back. So there is some central authority. Problem with these all cryptos, they are just decentralized. They are not controlled. They don't have any central authority. So in case there is no backing, so exchange closes or the project fails, chances are your all investment will go to zero. So what you should do in that case? So before investing crypto, accept that they accept technology, there is no value. So know about the technology. In case you see that it is becoming obsolete, before that, you can either sell it or change over what you can do, or if you are not sure what to do, better to take like advice from one who keep track of all this. Okay. And then there is a tax implication. Now this is very, I can say, dodgy thing. Personally, I have faced this. There is no clarity. Like in India, what you will do, suppose you bought a coin on Vajirex and you want to buy a new coin which is being launched, but it is not listed on Vajirex. What you will do? You see Binance is listed, but Vajirex it is not listed. So what people do, they transfer their cryptos from Vajirex to Binance. There they start doing trading. They earn profit, and when they want to convert back into INR, they will transfer again on Vajirex or any Indian exchange and then convert it to INR. Now what happens here, if you see any money which is transferred from India outside or from outside to India, it has to be through official channel. So when you are doing this, it's a violation of FEMA Act. You can, in case government find that you are illegally remitting money to some terrorist organization, they think so, although you must be not doing, or you are receiving money from some party outside which are not registered, which cannot be tracked through SWIFT. So these are all becomes like a crime in what government view, and you can be prosecuted for it. Now when this happens, hardly few people, like where big money is involved, it happen. We retailer have escaped, but my personal experience, when you go to income tax and all these guys don't understand anything. They just see what you have done, you have transferred, okay, so it's a violation of Foreign Exchange Management Act, and you will be tried for that. So if you ask a lot of CA or maybe some expert, they will say, no, this cannot happen, or this can happen, I'm not sure. But I know this has happened with me, and I discussed this with income tax officers also, with CA. Nobody is sure what will happen. So the best idea mitigation is to trade only on Indian listed crypto exchange if you are staying in India. Don't transfer your cryptos to outside other exchange through official channel. If you want to trade, tell your friend maybe at in USA or Europe to buy on your behalf in Binance and then trade it. But don't do it by transferring from Indian exchanges to other exchange or receive from outside. Because in case you get caught in tax net or some investigation, that time it will be a big issue. So just be careful regarding that. Then security and custody is a one issue. So that's what I said, when you buy a share in India through NSE, BSE, it's a secured demat account is there with CDSL. So there's a custody of your shares in dematerialized form. These crypto, when you buy, they are not secure custody is not there. So they are stored in wallet for the exchanges. I suppose you buy Vajirex. So they have their wallet, all our coins are stored there. So in case they get hacked, then it's a big issue. You cannot claim it from Vajirex. Few exchange like Binance, they guarantee you that if you lose certain amount, they reimburse you. They have done that before. Coinbase has partnered with third parties, some we can say custodian, and they keep all crypto on behalf of Coinbase for all their client. But in India, there is no other exchange which does this. So when you are buying all the crypto through JetPay, CoinDCX, or Vajirex, so in case they get hacked or there is an issue, you are at mercy, their mercy. So how to mitigate that? First, I have written that trade only through exchange which offer custody protection, which is not available in India. So other option, which is to note down crypto key on physical paper. Now, a lot of hardcore people who have large amount, they are called whales. They maybe store 100, 200 Bitcoin they have. They don't use only any wallet. they write down the code on a physical paper and they keep it in a safe or their house or hide it whatever old way. So we think that olden ways were redundant or old things to do, but still they are the safest one in crypto world. So that's the one way to do it. But only thing, in case you lose that paper, then it is gone. There is no way you can claim back those crypto. Almost $1 million of crypto, especially Bitcoin, has been lost in that way. And there's no way to retrieve it. Second is multi-currency wallets are there. So these wallets are created online, offline, which are called hot wallets and cold wallet. So cold wallet are connected to internet. There you can transfer all your coins which you bought on different exchanges, and they are very highly encrypted and very difficult to hack it. I've hardly heard that they have been hacked. And cold wallet is something offline. It's like a USB. You connect it to your computer, and it is having a address, and whatever coin you buy, suppose Bitcoin, Ethereum, Chainlink, Binance coin, whatever, you can transfer there. So the code is with you. Nobody can hack. If exchange is hacked also, or government bans also, that coin is with you on your hardware. So nobody can snatch it from you. So these things are there. Suppose tomorrow WazirX is told by government to hand over all the client detail and whatever coin is there under their custody, and they will ask everyone, whoever has having account, to come meet income tax officer, declare it, and they can simply take it from you. So that is the problem with these exchanges. So if you want, you have large amount, you want full security, nobody can take it from you, then physical paper and this multi-currency wallet or cold wallet is the best option to go about it. So there's one cold wallet which I use is Trezor. This is the newest model. You get it on India also, now it is available. I bought it long time back. That was the old model. This is the new one. So if anybody can buy, they can buy it and keep all coins which they are buying, transfer to this. It will generate an address. So same way you transfer from, suppose WazirX to Binance, you can transfer from exchanges to these places. So it will be safe here. So you can get it. Only thing, just make sure that it can hold a lot of currencies or cryptos token. Some hold 30, some hold 100, like types of what you call tokens. So just before buying, make sure what type you are doing, what type you are buying, how many tokens it can store. So just check that.
Yeah, Prashant, we lost you. We are not able to hear Prashant. Yeah, your voice is getting break. Prashant, your voice is getting break. Okay, so for a layman, you are basically saying WazirX is like.
Yeah, you can hear me.
Yeah, we can hear, but your voice is getting.
You can hear me?
Yes, better. Prashant, we have a question, Prashant, for a layman. Okay, so WazirX is basically like a trading platform, and the one which you showed. Can you just go back to the previous slide?
Okay.
Treasure. Yeah. So this Treasure is something a demat account. That's what you mean to say?
So it's not a demat account. So basically, what happens when you buy a coin?
Layman perspective.
Same wallet is there. ये बस लॉकर है, लॉकर जहां आप अपना गोल्ड सिल्वर यू पुट इट, सो इट्स अ लॉकर, बट ये लॉकर आपके पास रहता है. एक बैंक का लॉकर होता है, बैंक में देते हो. कल को बैंक में देयर इज समबडी कम्स एंड डज अ डकैती, दैट फुल दे कैन टेक आउट लॉकर एंड गो. ऑल्दो लॉकर इज वेरी मच प्रोटेक्टेड, बट लॉकर कैन बी ब्रोकन एंड टेकन आउट. बट एक आप घर में लॉकर रखते हो, उसमें रखते हो, यू आर रिस्पांसिबल फॉर दैट, एंड अनलेस एंड समबडी कम्स एंड नोज अबाउट इट एंड ब्रेक इट, वो उसको दी. So it's same like a locker with you. It's a personal locker, encrypted. Nobody can take it.
Thanks, Prashant.
You can hear it clearly now. No issues with voice now.
Yeah, you are loud and clear. Please Please proceed.
Okay. So now one aspect which Amya also discussed, that is volatility and manipulation. Now, lot of coins, I will say, like in Binance, since I trade on Binance also and CoinDesk, like 4-5 exchanges I have done it trading also. So what I found, there are group of people which they are called pump group. So they will release some news on Twitter or Facebook or a WhatsApp group nowadays that their development is coming, and then after that coin price will soar and something like that. And at particular time, particular day, they will make sure that coin is pumped. So suddenly you will see on certain exchange that suppose ADA, that is it is trading at $2, but on one exchange Binance, suddenly its price started increasing, like it becomes $4, $6, $8, and it will happen within a minute. So people will notice and they will start, okay, so 2 to 4, 4 to 6, so they will start jumping, and they might buy at 12, 14 tak jayega, 18 and 20, like this it will keep increasing. It will go insane. $2 it can go to $20 also within minutes. So people who come late to party, $14, $15, $20, $10, they will keep holding it for years, because suddenly after half an hour you will see prices come back to $1. So ये एक manipulation होता है pumping का. It happens a lot. कुछ very quick होता है, few happens in a week. So this is there. Volatility is there. See, volatility का the major reason crypto which people have to understand, it is a very small asset. Still it is like certain coin is 4 billion, 100 million. So very easy to manipulate. Very कोई एक बड़ा buyer भी है ना, manipulate नहीं. Suppose one big buyer comes, he says, okay, I will buy almost 4% of that coin. I will invest $1 million. So price will just skyrocket. It's not manipulated, but उसका base कम है. So as soon as, like you see nowadays, Bitcoin is not more volatile because its market cap keeps on increasing, $750 billion, $1 trillion approaching. So it's very difficult for a single player to come and make it volatile. So धीरे धीरे volatility कम होगा. But what I mean to say, don't jump in a coin just because its price is increasing or somebody said on a group or something. What Amya said, read the platform, what it is doing, why it is going up, something new has happened, because it's your hard-earned money. If you invest, you will like 2017, I know a lot of people invested, few coin at $600. Still those coin now today, after this bull run also, it's trading at maybe $50, $40. So they lost a lot of money. So mitigation, don't get into any crypto without regarding fundamental. Lot of pump term schemes are going on. Don't jump basis call on social media as group of people are implied. Okay, now people on Facebook and Twitter are paid to just spread the news. Same news you will see thousands of guys. So they are bots or maybe people, they are doing this. So just be careful so that you don't repent later. So that was for my side. I kept it simple. So Amya and Kiran, you can take over. Questions or session, something is there because it's already extended too late. I don't want to extend anymore. Thank you, everyone. Hope it was of some use.
Okay, Amya, see, it's almost we consume nearly 2 hours. So, but still I see so many questions here. So, what do you suggest, Amya? Amya, you are on mute.
Yes, I am already answering, and I have answered almost. I have answered many questions, but yeah, but there are quite a few already. So I am in process of answering them one by one. So, so I don't know how to take it further. Maybe.
Some question I answered before also.
Okay.
Still there are a lot of questions. So that is there.
Okay, no issues. I think few are this one already that repetitive also. So when they get
one question I would like to deal. One question is there: how to value like any, what is this, apart from trilogy? How can one value the coin and future prospect? So this I would just like to say to everyone. Basically, when a stock market, a new stock is listed, suppose now only we have a listing of what you call this new what was that famous burger chain. So Burger India, what was the Kiran?
Burger King.
Burger King. So Burger King got listed. So analysts, they see, okay, what is its cash flow, what is the market prospect. So all this comes. So they have a history, and on basis that we give it a valuation. In crypto space, when a new product is launched, so nowadays the DeFi, a lot of decentralized financial apps are launched. So analysts, they see, okay, what value it can generate, how much transaction happened during the beta phase, how much was the volume. Suppose during beta phase they see, okay, a lot of big institution has used, or some small institution has used that for money lending or transfer, and total value was suppose $2 billion in 1 month. So they calculate, okay, due to this, how much fee it will be getting. It is like a gas fee in Ethereum, some other coin burn their coin. So due to that coin price, on that valuation matrix and future, how much transaction they assume can happen. So just like a stock, a particular DeFi app will be valued. So, but here there are a lot of if and buts. Market is vast, so that's why you get lot of time exponential valuation for these type of, you can say, token. Yeah.
Yeah, Prashant, there is one more question for you. Please comment on XRP's future, especially after the SEC issue.
Yeah. So before, yeah, so SEC issue when happened, before that, XRP was the de facto, you can say, coin used all over the world for interbank transfer. A lot of companies were using. Now SEC, that when they said that, just I think 10-12 days back, one judge gave some statement which are in favor of XRP, and after that price has started rising. So the major issue with XRP is that lot of coin keeps getting minted, and there is no you can say what you call one particular holding place that you hold all your coin. It is not generated. So like Bitcoin, whenever people solve a puzzle, a new Bitcoin is generated. Ethereum also same thing. But in XRP already, whatever coin is there, the total number has already been generated, and it is with the company, and they allocate. So what SE said, it's you are not like a crypto, so you will be governed like some asset holder, and there was a tax issue, but they came up with some explanation which I don't remember exactly. So the favorable judgment came. So in case everything goes in favor of XRP, they are de facto, a lot of institutions are using for interbank transfer and all this. It can become a very big, it has a very bright future.
Yeah, thanks, Prashant. This question is for Amia. Okay, Amia, when someone buys one Bitcoin, question is from Suresh Govinchetti. When someone buys one Bitcoin, what are they paying that money for? Is it part of ownership of this technology?
Ownership of that one coin, not the technology as such, because these tokens are tradable, right? So it's just like owning one Bitcoin, like owning one share. So it's as simple as that. It's not that you are owning the technology, but you are owning just one token that is coming out of that technology. That's it.
Yeah.
Basically, Bitcoin part, everybody has to understand the value which a token gets is of two reasons. One, how much income it can generate, and second is how much security. So as discussed earlier, Bitcoin is more of like a value storage thing, and now they are building a lot of lightning channel, but Ethereum and all this is more of how much transaction and economic value they are generating. So that way in Bitcoin, how much hash rate is added, how many computers all over the world are connected, how secure they are. So all this thing now makes it valuable, because if you see $1 billion of computing power is involved in securing the network. So more computing power is added, more value of chain increases, and more transaction in that, trust comes in that, and value increases. So that's how Bitcoin price increases.
Thanks, Prashant. So this question is for Amia from Santosh. How the valuation of coin is defined? Why there was so much difference in coin prices?
Well, to be honest, the coin prices differ because primarily of the exchanges, like I earlier said. The entire value discovery approach of, or the price discovery approach used by these exchanges, like we have order book based approach, right? In NSE BSE also we have an order book based approach. So based on the number of buyers and sellers and what price they are willing to sell, and on top of that the commission that these platforms charge, that's why you see that one Ethereum costs differently on one exchange and differently on another. So that is the primary reason you see different values. And as I said, we are in very, very early phase. There was a question, and I think the person who asked left, that if the technology is there since 2011, why people are conducting webinars in 2021? I just want to answer that question fairly quickly because it's connected, because the technology was not really stable and it was really unsure that whether it has a potential to become mainstream or not. And now there are, things that based on which we think that it has a potential to become mainstream, and there is not much awareness about it. That's why we are conducting these sessions. And as I said, because we are in very, very early phase of the entire crypto, so the maturity which is there, let's say in our Indian equity markets, is still not there. And that's why the price fluctuations and price gaps are very high. You have to see it how our Indian equity market was probably 15 years ago. The spread between the bid and ask was very high, and it used to depend on your broker, right? The same thing is here. So you have to compare cryptocurrency of today, of 2021, and see it how Indian equity market was probably 10, 15, 20 years ago. That would be the correct comparison in my view.
Hey, thanks a lot, Amia. I think we don't have much time left. We just have 3 minutes. So I want to take last question. Either one of you can answer. Okay, this question is from Anurag. A quick brief on what is happening in Doge could be a good info for us in terms of real life experience. Either one of you can answer it.
Uh, well, to be honest, like I always said, it was created as a parody coin. It was created as a joke. And the moment Elon Musk tweets about it, the people with large money, they simply come and start pumping it, and they then basically short sell at the top. To be honest with you, there is no application right now this coin has. There is no real time problem that it is trying to solve at this moment, at least. So it's a lot of speculation happening around it, and because it's going up 200% in a day, that's why it's catching a lot of eyeballs. But if you are looking from a perspective that we discussed in this session, you would definitely say, I would rather stay away from such coins. And I'll let Prashant Bhai to add anything if I missed.
See, basically, there is a Reddit group which promoted Dogecoin.
Yeah.
Now, what is going on? It's a very open forum API. Anyone can come and contribute. So that way, Dogecoin is very good, and few people are, like you can say, proposing that it is the one coin which can be made world money, because the transaction fees are almost zero, and it's very easy to deploy. Lot of people are developer are ready to contribute. So there is a talk which is not in the mainstream, where they are thinking not a Bitcoin, but currency like Dogecoin could be a world currency, because it's very easy to move. You can say cost of setting it up and running it is very low. So that's what they say. And other this is the one thing I think is being promoted to hype the price. What I'm
Well, I'll
using
quickly add.
social media, and
I'll quickly add one thing to that is, we have to also take into consideration how big the underlying chain is. For example, if you look at Ethereum and its starting days, the cost of executing transaction on Ethereum was also very, very low. So what happens is, as more and more people adopt the underlying chain, it starts getting congested, and because of the congestion, transaction fees skyrocket, right? So there have been currencies coming in and getting portrayed as world currency, and when suddenly more people adopt it, congestion seeps in, and suddenly that chain cannot take in that much of load or transaction and it goes bust. So that is also one of the aspect that we should
Correct.
keep in mind before we do anything with this with this token.
And I will just add, Dogecoin, anyone who is entering now, just be very careful. Already today from 40 it had fallen to 20 rupees. You might see it at 10 within a week. So just don't jump into the hype.
Yeah, Prashant, thanks, Prashant, and Amia, thanks a lot. It was extremely informative session. I keep getting a lot of messages saying that, okay, thanks for organizing. In future also, we'll have such sessions. Okay, so thanks for giving us such a that good basic foundation, and we'll definitely put good efforts before we jump into investing cryptocurrency. Okay, so challenges, Prashant explained very well what are the challenges. Toby, this one that purchased through WazirX, but still there are challenges which exist. WazirX could be hacked. So we'll take care of all these things. We'll try and learn more on crypto and try to invest or try to allocate at least 2 to 3% of overall asset allocation. Thanks a lot. And audience, thanks a lot for your time. 2 hours of time you guys have spent. Okay, good night and have a nice weekend.
Okay, thanks everyone.
Thank you.
Thank you. Bye-bye.